So if I'm interested in refinancing my home, what kind of a point gap would I need to make for it to make sense?
Good question. Generally speaking, you want to see, I mean, some people, if they can save $25 a month, they will refinance. But I would go on the basis, not so much of a gap. Most people we talk to appear to be in the high 3 to low 4 range or higher. So let's say they're in the high 3 and higher. All those people are eligible. Then we're going to analyze it. All right, when did they buy their house? I'll give you a perfect example, Randy. I talked to a past client of mine. She bought a home about 3 years ago. And we just did a refinance for her. And I actually asked her this yesterday because she called on a topic. And so she'd been in the home about 3 years, got a 30-year fixed rate loan. Of course, the market's gotten better. And we refinanced her. And we toggled back and forth, 15-year, 20-year, 25-year, 30-year, gave all the options. We ended up with a 20-year loan, and she shaved off right at 7 years worth of payments, and she's paying $30 more per month. So I turned it around and then said, hey, if you could get rid of 7 years and you only invested $30 more a month, would you do it? And the answer would be yes. So we're seeing a lot of that. That to me is the most exciting thing. And in this time where there's lots of concern, you know, people don't want to catch COVID. They want to stay healthy. They want to see their life thrive. These are huge financial impactful moments that I haven't seen in my 30 plus years of doing mortgages. You know, you buy a house, hip hooray, got a house. Everyone's happy, everyone's excited, but these purchases and refinances are having a huge impact on families. I'd say specifically the ones where, like that client, getting rid of 7 years worth of mortgage payments. Our industry can never capture that. The banks can't capture it. She's just eliminated that. And then a 20-year loan, you're basically paying more principal day one than you are interest. So that's pretty exciting. I mean, another client, same thing, 23-year loan, but she wanted to pull $20,000 out. So same payment, pulled $20,000 out, 23-year term. She shortened a few years off of her loan. The stories from client to client, and maybe because of the pandemic, are having a more impact on their financial lives. So that's been the exciting thing. As far as the purchases, that strategy hasn't changed. The people buying right now are benefiting from the lower rates. So that's been a big plus to the consumer. Prices haven't escalated at all. Obviously, they stayed flat, and probably some there's multiple offers, so there's competition out there, which is good. But the buyers, for the most part, buyers will buy when they need to buy. Christmas time, Thanksgiving, New Year's, pandemics, mortgage meltdown, stock market rallies. There's always people buying, always people selling, always people refinancing. So it's great to be a mortgage lender in any marketplace. And I've taken this whole situation, and I'm excited for what we're seeing right now in the future. There's a lot of, in my eyes, a lot of optimism.